Hello everyone and welcome back to the channel. In this episode of ASX ETF Profiles, we'll be looking at ETHI, the Betashares Global Sustainability Leaders ETF. We will look at what ETHI is, take a look at its holdings as well as its fees, performance, and finally give my thoughts on this ETF. This is one of the most popular ETFs on the ASX in recent years and has become something of a trendsetter in the rapidly growing ESG investing space. If you've been on this channel for a while, you've probably heard me talk about ETHI numerous times, and I have mentioned it in the Emerald Portfolio Overview video and the ComSec Pocket Overview video. And it is one of my favorites, and I want to go into a little more depth regarding what ETHI is and how it invests. So with all that said, let's take a look at the underlying principles behind ETHI and how it is invested. So to start things off, ETHI is an ESG themed ETF. What does ESG mean, you may ask? ESG is environmental, social, and governance principles. And these three factors are becoming increasingly important to investors in this day and age. Quite simply put, environmental is how a company interacts with nature. An example of a positive interaction might be a company that responsibly sources their raw materials, plants trees to offset their carbon emissions, or something of that nature. A negative interaction might be a company just being irresponsible twats and siphoning off their toxic waste into the local river, which isn't good. Moving along to social, and quite simply, social is how a company interacts with its community. It could be a company that donates to charity to help the local community, provides housing, provides job opportunities and all that sort of thing. And that'd be an example of a positive social change. A negative social interaction might be a company that underpays its workers, exploits labor in countries that don't really have laws protecting people, so they're essentially slaves, or people being discriminated because of gender or race or other such things. And governance, quite simply, is how the company is run. Is it a transparent company? Do they share all their financial info? And how sound is the leadership? An example of a good leader is Lisa Su of AMD. She turned the company around when she took over in 2014 from a company that was in basically dire straits and made it a juggernaut that it is today. Look up AMD and look up Lisa Su. You'll know what I'm talking about. But anyway, one heck of a leader. But moving along, this ETF applies basically a negative screening process. So what happens is an index of companies is put forth, and companies are removed if they're involved in things like fossil fuels, arms, tobacco, and junk food, just to name a few sectors. Furthermore, companies are required to be within the top 1/3 of performance for carbon efficiency within an industry, or undertake efforts to offset their emissions. Obviously, this selection process is not flawless, and some companies will fly under the radar of what some would consider ethical. However, it does eliminate a large portion of the worst offenders. So with all that said, let's take a look at the kind of companies that this ETF does invest in after we've screened out the aforementioned. ETHI currently invests in around 200 companies, giving a fairly diverse portfolio. This is not as much as something like VDHG, which numbers in the thousands of holdings, but is enough to constitute a fair level of diversification for most people. This ETF does lean in towards information technology with companies like Apple, Nvidia, Tesla, MasterCard, Visa, Adobe, to name a few of the flagship holdings, with smaller but still significant sections in consumer discretionary, healthcare, and financials. You can look through and see companies like United Health Group for healthcare, Roche Holdings again for healthcare, AIA Group for financials, and things like American Express, and the list goes on. A lot of well-known prominent companies that have been around for a long time. Now, the majority of these investments are in the United States, with close to 3/4 of all the equities weighted towards the US, with smaller amounts weighted towards Japan, Switzerland, Netherlands, Hong Kong, France, and so on. So this is a very US-centric ETF, so any movement in the NASDAQ and S&P 500 is likely to be fairly correlated to the movements of this particular ETF and will have a fairly direct impact upon how it performs. Now, as to the rebalancing of this particular ETF, it happens once a year. And what will happen is the weighting of any particular holding that's above 4% will actually get pruned down. So if the weightings stay as shown here, companies like Apple, Nvidia, and Tesla that have performed significantly higher than normal and are above their weighting will have a section sold and reinvested into other holdings. And this rebalancing event is sometimes a cause for a very significant dividend, which occurred very early this year when ETHI paid out a nearly 10% dividend in one payment, but I'll get to that shortly. So in short, it's a fairly diverse company, IT dominated, but it's not entirely IT like NDQ or any other entirely tech orientated ETF. But what does all this mean for performance? Let's take a look at that, shall we, and have a look at the fees and so forth. Looking at the basic profile of ETHI, the assets under management right now sit just over $1 billion. And considering how recent this ETF is, that is really, really impressive. By comparison, VDHG, another very popular ETF that I talked about last video, sits around half of that at 500 million. Moving on to the fees and / management costs, this particular ETF has a management fee of 0.59% per annum, which is a lot higher than something like VDHG. But you have to keep in mind this is not an index fund. This is more actively managed and therefore elicits a higher fee. The distribution frequency for this one is semi-annual, so every 6 months you'll get a dividend, once in January, another in July. The way it normally works is that the January dividend will be quite small, whereas the July one will be much more significant. And this is due to the rebalancing I was talking about earlier. Normally around June, July is when the annual rebalancing transpires, and therefore any leftover funds are paid out as a dividend. And it says the 12-month distribution yield on this one is 11.1%, but take that with a grain of salt, because this year in July there was an absolutely obscene distribution that was paid out to the order of 12.8%, and I'd consider that more of an outlier because the fund was rebalanced from around 100 holdings to 200, and I guess they had a fair amount of cash left over, so they paid it as a massive dividend. So don't let this yield deceive you. This ETF is more primed towards capital growth. It's just this one particular payout sort of skews the numbers. If you look back at previous years, the distributions per unit weren't nearly as high as this year's. And as for general performance, well, this fund, ETHI, has performed impressively, to say the least. For the 1 year, it's up 24.22%, and since its inception, it is up 21.64%. And this is very, very impressive, and in my opinion, more than justifies the higher management costs. This sort of performance is more than double average market returns, and obviously it goes without saying that past performance is not an indicator of future growth, but it goes to show that it's invested in fairly stellar companies and has grown at a very impressive clip, and hopefully it continues to emulate this sort of performance going forward. And this ETF is a large reason for the outperformance of the Raise Emerald portfolio relative to the other Raise portfolios because of this one ETF. But with all that said, I'm going to move on to my final thoughts. So in closing, I will say that this is an ETF that is worthy of consideration for someone looking for a reasonably diverse ETF that has the benefit of being more ethical. It's far from perfect, and many people's interpretation of ethical may differ. Still, even on the merits of its performance so far, it is certainly a solid contender at a fairly reasonable cost. I myself own a very large holding of ETHI by virtue of having a Raise Emerald account, which you can check out on my channel if you haven't already seen that. And I've also bought some separately on my Superhero account, and you can also check out my video on that. ETHI will remain a core ETF of mine well into the future. And with all that said, I'll just say that I plan to cover many more ETFs in the future. If you have any suggestions, please feel free to comment down below and subscribe if you haven't already and you want to see more of my content. I also want to apologize too for not posting very much the last couple of weeks. I've been working 80 to 100 hours a week, so if I sound a little tired, it's because I am. So I apologize again. But with that said, I'll just leave it here and say that my name is Rich, and I will catch you guys in the next one.